Welcome to the Dental Resources Podcast, produced by the Crown Council. This is Stuart Anderson. The Crown Council has spent years working with the very best dental resources available. This is the place where the best in dentistry come together to learn and grow. And so through this podcast, we hope to share the very best ideas, practices, and solutions that dental businesses and resources are using. This will be a source for finding solutions for your practice. Any business that touches the dental world, we are connecting with and sharing it here. Please enjoy the Dental Resources Podcast. On today's podcast, Spencer interviews the Bedford Team as they're one of our newest resource partners. If you own your own practice or own the real estate in which you run your practice, you cannot miss this podcast. For years, the Bedford Team has specialized in cost segregation and innovative tax and energy solutions for commercial real estate. If you feel like you've turned over every rock for increasing revenue and savings, come learn from the Bedford Team about cost segregation.
Welcome, listeners from the Crown Council, to our podcast, The Best Resources in Dentistry. We're excited to be bringing this resource partner podcast to you today. And today's special guest, we have Frank Giudici from the Bedford Team. You can check out the Bedford Team at thebedfordteam.com. And Frank is one of our newest resource partners within the Crown Council. We're really excited to be having Frank and the Bedford Team at the Crown Council annual event coming up in Nashville in January of 2020. Frank, thanks so much for joining us.
Thank you, Spencer. I appreciate the opportunity. And very excited about Nashville, because any excuse to get me out of the Northeast during the throes of winter, I'm all about.
That's awesome. Frank and the Bedford Team specialize in cost segregation. Cost segregation is something that the Crown Council has never had a resource partner that focuses on or provides a resource to cost segregation. Many of our listeners probably don't understand the meaning or the terminology of cost segregation, or some have a pretty good understanding of it. Before I take that further, I'm going to allow Frank to give an explanation of the Bedford Team and what they provide.
Yeah, thanks, Spencer. And it's don't feel like you're out of the loop. It's very much a niche industry, and the IRS kind of solidified it in 2004 when they released what's called the Audit Technique Guidelines for cost segregation. So really, it became very popular in the early 2000s and has been popular ever since. But the basic concept is this is an engineered study that gets performed on people who own depreciable real estate. And so when I say depreciable real estate, I mean any real estate that is income producing in nature. And therefore, typically when CPAs and accountants handle depreciable real estate on the books for their clients, they calculate an annual depreciation deduction, which is always a good thing, right? Because a deduction is always good. So what they do, though, is the way they calculate the annual depreciation deduction for real estate, they use what's called a straight line methodology. And bottom line is it only gives you a fraction of a deduction every year until the property is completely depreciated. Whereas if you have an engineered cost segregation study performed, you basically accelerate certain assets within the building, the actual real estate. You accelerate those deductions so that you're able to claim them now up front. You take advantage of the time value of money because you're front loading deductions that you can then use to offset income. So it's one of these things where it's a significant cash flow generator, and it just it really does wonders. And obviously the cash flow that these dentists have can then be used for either reinvesting back into the business or reinvesting in other real estate or the stock market,
Frank,
you name it.
if you noticed, my screen left for a second, it was almost
Yeah.
like mine disconnected. So I'm betting that it did not record that answer.
I thought you were screwing with me.
No.
Okay.
So the introduction there was perfect. But I'm just going to start over with of just that question. Is that okay?
Do you even think you need to do the question again? You want me to just rock and roll into the answer?
I'll do the question so it makes it easy for editing.
Okay.
So we are really excited to have Frank with us today and to talk about specifically what the Bedford team provides in cost segregation. I think that many of us have an idea or have heard of cost segregation, but don't have the exact details of how it works. Before I go any further, I'm going to allow Frank to provide an explanation of what the Bedford team provides and an explanation on cost segregation.
Great. Yeah, thanks, Spencer. It is very much a niche industry, so please don't feel bad about yourself if you haven't heard of it. It really the IRS really stamped its being in the planet in October 2004 when they released the audit technique guidelines for cost segregation. So it's obviously gained a lot of momentum since then, because the whole idea of an engineered cost segregation study is it gets performed on depreciable real estate, and depreciable real estate is real estate of any kind that generates income. So obviously you and I, Spencer, wouldn't be able to do a cost segregation study on our own personal homes because you can't depreciate your own home, right? That's a personal use. But as soon as a dentist who owns the real estate that their business functions out of, that now becomes a depreciable piece of real estate. And long story short, the typical method for calculating the depreciation deduction on real estate is called straight line. It's a straight line methodology, and what it does is it really only takes a fraction of a deduction annually until the building is fully depreciated. So unfortunately, the annual depreciation deduction doesn't amount to much, right? And so a cost segregation study gives people an option to accelerate certain assets within the real estate, depreciate those assets quicker so that you can increase your deductions in the beginning years and take those deductions, offset taxable income, and now all of a sudden you have cash flow because these accelerated assets have now allowed you to keep money that you'd otherwise be paying Uncle Sam. Mm-hmm. So, and you know, I can get into it more later, but you know, it doesn't even necessarily have to be, I don't need to be introduced to somebody who just recently acquired or built new or renovated their practice. The general rule of thumb really is anybody who has acquired, built new, or renovated their real estate from present day back 15 years is still a potential candidate. So, and a lot of people go, oh gosh, 15 years, you know, does that mean I have to refile 15 years of tax returns? No, you don't. So there's a whole process that kind of waves the magic wand over it, and you don't have to refile any of your tax returns. There's a special form that gets filled out, and that's something that Bedford provides. So bottom line is this: a cost segregation study is a mechanism that generates significant cash flow in the form of reducing taxable liability. So that in a nutshell is what it is.
Yep. That is a perfect explanation there, Frank. And I think our listeners get it as our listeners are primarily dentists. Give us the short story on how dentistry became a focus and correlated with the Bedford team, and how you work so well in our industry.
Yeah. I know I had mentioned, dentists, because obviously the Crown Council that's who we're catering to. But the bottom line is, it's anybody with depreciable real estate can have this study performed. It just so happens that medical and dental offices, they just gain the highest yields from our studies. And without getting into the weeds, our studies segregate, hence cost segregation. We segregate personal property assets and land improvement assets from the real estate. Personal property assets depreciate in 5 years. Land improvement assets depreciate in 15 years. So anytime you can segregate a 5-year and a 15-year asset out of a 39-year asset, which is what all commercial real estate depreciates under. So that's a key thing to understand, is that all commercial real estate depreciates over 39 years. Yeah. So if you have a study performed and we can segregate for dentists, it's anywhere between 25 to 35% of their real estate can be shifted out of a 39-year bucket and put into a 5-year and a 15-year. That's massive. I mean, shifting 25 to 35% of your real estate out of a long life asset and shifting it into a short life asset, it works wonders. So it's just one of those things that the types of real estate that dentists and medical practitioners have make for great candidates. Mm-hmm. And, without giving away the secrets, all the individual offices that have the millwork and the sinks and the computer connections and the chairs that need special, electrical and the compressed air lines and it's all the various systems that a dentist has to have to be in business all become personal property. The problem is your typical CPA, and I shouldn't even say typical, even if it's a Big Four CPA, they don't have the capability or the time or the background to go and justify the price of the labor and materials it took to install those various systems within the dentist's office to be able to segregate on their own. Per the IRS, you need to have a background in engineering and construction principles, and that's what Bedford is. We are a team of engineers and CPAs. I mean, that's our bread and butter. So, sorry for the long answer, but it just so happens to be that dentist's office are just prime candidates because of the mechanical, electrical, plumbing systems that are entailed in those buildings.
Yeah.
They just make for great candidates.
It's perfect. Thank you for that, Frank. One question I know the listeners, the viewers are interested in is the Crown Council has a wide variety scope of new young dentists to what we would consider the back nine that are preparing for transitioning over the next 5-6 years. So to our new young dentists that are looking at potentially buying the real estate for their practice, and those that are in between and nearing the end, how does the Bedford team work with at any point? Is that relevant to any stage of our practice right now?
Yes. And to be quite honest, I'll touch upon this a little bit later. Unfortunately in our industry as well, I shouldn't say unfortunately in just our industry, it happens in all industries. There's less than reputable firms that bring down the nature of what we do. And it's this type of conversation that needs to happen to know who we can help and who we can't help, and be honest with them so that we're not leading them towards something that they don't need. Okay. And so when you mention that you have a demographic within your Crown Council that is on the back nine, depending on how many years that back nine demographic plans on selling their practice, and usually the real estate to go with it, that may be a make or break with whether we do a cost segregation study, because at the end of the day, when you sell commercial real estate, you pay what's called a depreciation recapture tax. So the last thing I want to do is sell somebody a study that accelerates all these depreciation deductions forward for them to use in the current tax year to offset income. And then they go and sell the real estate the next year and have to pay this massive depreciation recapture tax. So we need to have the conversation. We need to understand the story of what is your succession plan? If it's 5, 6 years, then it could quite honestly make sense. But if it's 1, 2, 3 years, it may not make sense. However, where it could make sense is when they finally do decide to sell, we could work hand in hand with their listing broker, and we could provide what we call an estimate of benefits. It's basically an estimate of what the cost segregation study would be for the buyer who ends up buying the real estate. Because what happens is the buyer now has a little more comfort knowing that if they're going to buy that practice, they can expect X amount of accelerated depreciation deductions upon acquisition that they can then use to offset income. And now all of a sudden they feel a little more comfortable about following through with the sale. So worst case scenario, the people who are in that succession planning phase and plan to be moving on in the next few years, we can still be a benefit to them. They don't even have to pay for it, right? We'll just provide the estimate of benefits to help them sell their practice in the real estate.
Right.
For those in the middle of their career and just plugging and chugging and nose to the grindstone, it's a perfect opportunity to do it. Again, as long as the real estate that they work in has been, either acquired, renovated, or built new within a 15-year time span, then absolutely all day long it made sense to look at it. And then for the younger dentists who are in that kind of phase where they're still, paying off their debt and they're trying to weigh, do I buy new? Do I build new as far as real estate goes? Do I acquire another practice? This is a mechanism that will help them to free up cash flow, because ultimately, Spencer, all we're doing is providing a mechanism that takes advantage of the time value of money. We're just giving dentists the ability to take massive deductions now so that they can take that cash flow and reinvest it when the strength of the dollar is at its greatest.
Yep.
That's the name of the game. So really, I'm a little biased, but I personally think that whether they're on the back 9, the front 9, or they're struggling in the middle like my golf game, we can be a service to them. I just think that it behooves them to at least look into it.
Got it. And so, Frank, then because you just addressed each different level of member within the Crown Council from young to the back 9, what should they be doing now? What do you recommend that they could be doing now in preparation for this or looking into this?
Yeah, I mean, listen, the key element is to make sure I'm assuming they all have CPAs or accountants. So the number one thing is to, reach out to me first, right? Because I want to allow me to make the introduction. And then what I can do is, rather than try to have the various Crown Council members try to regurgitate what I just said, I can provide a standard email that kind of describes what cost segregation is. And quite honestly, Spencer, you'd be surprised. There are still CPAs out there who have no idea that this exists. Yeah. So I'm not looking to make a mockery of any CPA, but what I will do is I will provide a very boilerplate introduction email of who I am, who Bedford is, what we do, and then the client can easily take that email, forward it to their CPA, and say, hey, this is one of Crown Council's new resource partners, and their number one recommendation, and please, make sure this makes the cut. Bedford always wants to know that the CPA is on board. That is a key component to this whole process, because although I can generate depreciation deductions on any piece of property that you see when you leave your office door, as long as it's not being used for personal use, I can generate depreciation deductions on anything. The problem is, can the depreciation deductions be used by the owner? And that's where we need the CPA to confirm, is my client set up correctly from an entity structure? Are they single source LLC? Are they an S Corp? So depending on how they're set up as a business, that will determine whether or not our cost segregation studies will be able to be used to help them offset their taxable liability. So number one, reach out to me. I'll provide you a very short and sweet email introduction that you can then forward to your CPA, and then let's have a conversation.
Yeah. And so, Frank, so our listeners know, one initiative that we have taken very quickly here in the Crown Council with Frank is introducing him to our Crown Council CPAs to kind of cross-reference or connect our resource partners to work together as a team, so that many of our members that are using the Crown Council CPAs could be right in line with Frank. And so another opportunity there at the annual event to be able to get both of them together and kind of start the outline a little bit. So definitely work together as a team. I like that a lot. Frank.
Yeah, and actually, Spencer, just to give a attaboy to your CPA resource partners that you already have on board. The two that you introduced me to actually are well versed in cost segregation and have recommended to their clients. So that to me is key as far as giving your Crown Council members confidence that this is something that established resource partners within the Crown Council are already pushing to their various clients. So I was actually happy to hear that. So now the key is making sure they use me going forward, because Bedford, and I'll get into it, but Bedford really prides ourselves on being tops as far as reputation goes with the IRS and within the cost seg industry in general.
Yeah, let's move right into that topic right there, Frank, which is in the industry, in the cost seg industry, I think that there's opportunities that the wool could be pulled over the eyes of one that doesn't have the time to either pay attention to or to completely understand, and they're just simply trusting you. So in the end, could potentially be burned if we didn't understand what we were getting into or how cost seg completely worked. How can we ensure that takes place and to maintain that relationship within the Crown Council members so that they feel peace of mind? What do you see in the industry in general that could almost make someone leery of that as well? And how? So I guess actually my main question there is, we strive for a culture of success within the Crown Council. The Bedford team has created one. They're an ethical group. Share more about that.
Yeah, it's part of building a culture of success within Bedford, especially the industry that we're in, that's unregulated by the IRS. Integrity is number one. It's one of those things where your reputation is everything. So if you are hung by your toes because the IRS audits one of your clients and they find out that your study is exaggerated and invalid, that's a huge mark against your record. And so Bedford, from the very beginning in 2002, when Greg Bryant, our managing partner, founded Bedford, he made it very clear from the beginning that there's no coloring outside the lines. It's understanding the tax law, the IRS code, and making sure we play within the bounds, because at the end of the day, the last thing we want to do is put a client at risk of an audit that ends up being successful for the IRS, and they end up having to pay back taxes and penalties and fees. It's just, that's a no-win situation. So from the very beginning, Bedford kind of took an oath that we were going to play by the rules, no matter what kind of pressure we got from the client. And you know, ultimately, it's served us well. We have one of the best reputations in the industry. We're one of the largest independently owned cost seg firms in the country. And when I say independently, a lot of cost seg firms are actually owned by CPA firms. And we just feel like there's a conflict of interest when a CPA firm owns a cost seg, you know, division within them. So we are independently owned. We're national. We're all across the country, and we pride ourselves on that. And so to get into a little more of the integrity thing, yes. Bottom line is this: as a client, you're doing a trust fall. You're basically you're doing this, and you're falling back, and you're hoping that your cost seg provider is going to be there to catch you in the face of an audit. And bottom line is, you as a client will never know, nor will your CPA. You'll never know what the quality of your study is that you just paid thousands of dollars for. You will never know what the quality is until you get the knock at the door by the IRS. And that's a scary thing. Now a lot of people come to me and say, yeah, but Frank, you know, depreciation is one of the last things that gets audited. And I say, you're absolutely right. However, it's not necessarily the cost seg study that has to raise the red flag. It could be anything within someone's portfolio that the IRS raises the red flag. And once they're in the portfolio, I don't know if you've had any experience with this, but they start poking around. And they go, oh, what's this? Oh, a cost seg study. Let's look at that. So it's not just the cost seg study that raises the red flag. It could be anything. So at the end of the day, why take that gamble where you're going to work with a company who we call low cost providers, because they charge bottom barrel pricing, and quite honestly, they don't have the right set of professionals doing. Professionals is giving them too much credit. They don't have the right people performing these studies, doing the checks and balances to verify that everything is correct. And they're giving it to the client. The client is happy because the results of the study meet the original estimate they got from the company, and they give it to their CPA. The CPA doesn't have any idea of engineering or construction principles. He has no idea whether or not this 40-page report is legit. He takes the report, he files it away, uploads the IRS, tax returns, and everybody's happy until the knock on the door comes. So at the end of the day, we're just very upfront with our clients. We tell a lot of clients that it makes no sense to do cost seg. There are certain situations where cost segregation is not it's just not a great mechanism. Mm-hmm. And so, we've just found that having that integrity as a culture of our success has just, that's why we've grown leaps and bounds year to year, and we have repeat clients, and that to us is everything.
That's great.
So
thanks, Frank. I'm gonna ask one question to you as we wrap up here. The information has been awesome, and as you mentioned at the beginning, a unique niche, and which we'll showcase here in all of for all of our listeners. Really enjoyed it. For our listeners out there today, if you were to provide one golden no cost recommendation for our listeners today to go and do or to prepare with respect to everything that we have talked about today, that could end up resulting in talking to you eventually, what would that be today? you've listened to this today and you're interested in doing something tomorrow, step one is what?
Well, actually, I just want to add in a nugget that I think that dentist clients that I've worked with who are quite successful in things that they've done to continue to be successful. And I think it's a nugget that you know, it may sound obvious, but it's just something I think I want to point out, is that getting your CPA and your financial advisor on board from the very beginning and having those conversations about short-term, long-term goals, succession planning, having those two pillars in your life is key. And making sure that you're checking in quarterly, semi-annually. I'd like to think it was a no-cost nugget, but unfortunately, you know, people need to get paid as well. So, you know, their time is worth it, is what I guess I'll get to. And listen, and much like our industry, right? You get what you pay for. So if you have a great financial advisor and a great CPA, they are worth their weight in gold. And that's how I like to think about myself and Bedford in general with our industry. So I don't know if that necessarily answered your question from a nugget perspective, zero cost, but making sure you build a team around you. And I know it sounds obvious, but you'd be amazed at how many people I think just overlook it and think that they can handle it on their own, or they only have one pillar and they don't have the other. But I think it's really key to have your CPA and financial advisor speaking to one another on the same page and all sharing the same vision of where the practice is going.
Yeah.
So to me, I mean, call it a Captain Obvious nugget, but I just wanted, that's something that came to mind, and that's what I really would like to reinforce. So now, as far as steering it towards Bedford and cost segregation, I mean, really the first step is reaching out, introduce yourself. You know, if I'm not on the road, I'm behind a computer. So I will email, I will talk, even though I'm one of the, I guess I could call myself one of the oldest millennials or the youngest Gen Xers. I do know how a telephone works, so I'm more than happy to jump on a call. But the key is, much like I said, getting the financial advisor and the CPA together, getting the cost seg guy and the CPA together, right? Marrying those two people together. Because at the end of the day, that's what I am. I'm just another tool for you to add to your repertoire of trusted advisors.
Yep.
And there's more that goes beyond what we've mentioned. For people who do renovation, you know, there's studies that can be done that you can actually claim losses on stuff that you're demolishing, and there's a study that can be performed to claim those losses. I mean, it's one of those things where, you know, you just need to have a resource to be able to go do and talk and talk these things through, so that we can help you kind of game plan for the future.
That's right. It's perfect. Frank, thanks so much for your time. Again, this is Frank Giudici, representing the Bedford Team. Again, Bedford Team, thebedfordteam.com. And looking forward to having them at the annual event and being a new resource partner of the Crown Council. And thanks so much for joining us.
Yeah, and again, thank you, and I really hope to meet a lot of you in Nashville. Don't be shy. Come find me. Big blue exhibit table says Bedford on it. So looking forward to it, Spencer. Thank you.
Thanks so much.